Well, surprise, surprise. Once again, Tesla reports quarterly earnings, destroys Wall Street expectations. Let's be honest though, these clowns have no idea, so that's not really a meaningful achievement. Drops a few bombshells, lets a few cats halfway out of the bag, shares some juicy new details, some goals, some figures, some numbers, and moves one step closer to completely and utterly destroying the internal combustion engine vehicle industry. In fact, I'm so excited about this call, I'm not going to bother with my usual promo, so don't forget, link in the description for Patreon, merch store, all that shit, whatever, let's just get into it. First, some real quick highlights from Tesla's Q1 2022 earnings report, the thing that sent the stock to the moon, up around 4.20% after hours. Not even kidding. Check for yourself. Let's get straight into it. First of all, cash. Operating cash flow, less capex, free cash flow in other words, of $2.2 billion in Q1. Yes, Tesla printing multiple billions of dollars per quarter now. Total debt now under $0.1 billion. Basically none. Why? Tesla had too much money. What are you going to do? Pay down some debt. Profitability, $3.6 billion of GAAP operating income and a stunning 19.2% operating margin. Tesla is now almost at 20% operating margins. This is unheard of in the automotive industry. In fact, this is unheard of in most businesses, period, let alone companies producing complex manufactured products at scale. This is fucking insane. And a 32.9% GAAP automotive gross margin in Q1. Even if you back out regulatory credits, Tesla's automotive margin now over 30%. Meanwhile, some of the other automakers will be lucky to get 10%. I'm also not kidding. And some huge milestones here. Production and delivery started from Gigafactory Berlin in March, and then 1 month later, exact same story for Giga Austin. I mean, holy shit, talk about growing at a staggering rate. And an important quote here, quote, "We are putting significant efforts into in-house cell production, raw material procurement, and supplier diversification." In other words, Tesla trying to alleviate bottlenecks and secure their future capability to grow at ridiculous rates. Quick highlights here, automotive revenues up 80% year over year, ridiculous. Again, the operating margin 19.2%. Just for context, Q1 2021, 1 year ago, Tesla's operating margin 5.7%. In Q2, 11. Q3, 14.6, Q4, 14.7, and now almost 20%. This is madness, and the trend clearly to the moon. Tesla's net cash provided by operating activities up 143% year over year. Cash and cash equivalents about $17.5 billion. Now, for the record, this is despite building 2 gigantic factories in the last 12 months. Guess what? Tesla's cash and cash equivalents still up over the last 12 months. Again, I want to redirect. Built Austin and Berlin and still managed to increase their cash. I mean, what even is this? Oh, that's right. This is called Tesla. Total revenues up 81% year over year to $18.8 billion. And a quote here, our operating income improved to $3.6 billion in Q1, resulting in a 19.2% operating margin. I'm never going to get sick of saying that. One more time, 19.2% operating margin. What the actual fuck? Tesla also repaid $2.1 billion of debt, as I mentioned, now less than $0.1 billion. In other words, $100 million of debt outstanding. It's not going to be that long before Tesla owes less than I do. Really? Solar deployment's going absolutely nowhere. But the good news, storage deployed up 90% year over year. Some notes here on the US and Texas. We delivered the first vehicles with 4680 in-house made cells, single piece front body castings and structural battery packs in Austin. Huge milestone. There were some people who are a little bit uncertain what's actually in these vehicles. Well, here it is in writing, confirmed by Tesla. On the Berlin factory, production at Gigafactory Berlin Brandenburg started in March 2022. Tesla confirming that Model Y is using both structural packs with 4680 cells as well as non-structural packs with 2170 cells can and will be produced there. In other words, if the ramp of the 4680s is a little slow, that doesn't matter. Tesla has a backup plan, 2170s. Smart strategy, but of course, you knew Tesla wasn't dumb enough to just rely on the 4680s successfully ramping without any hiccups to get deliveries from Berlin, right? And I will never ever get sick of looking at these charts. Tesla's market share of vehicles by region trailing 12 months. US and Canada, Europe and China. Can anyone spot the trend? You know what that's called? Exponential growth. Each of these following almost an identical curve. Can't wait to be doing an update on this in 2, 3, 5 and 10 years time. On autopilot and full self-driving, quote, "We are aiming to release FSD Beta to all US FSD customers before the end of this year. Currently FSD Beta available to a little over 100,000 users. This is a huge milestone for the company." Remember that data flywheel. Tesla also confirming that nearly half of Tesla vehicles produced in Q1 were equipped with a lithium iron phosphate, LFP, you've probably heard that a lot. LFP battery containing no nickel or cobalt. Tesla diversifying their cell chemistry. This is super important. This can also drive some of their costs down. One of the more stunning and predictable, I literally called it at the time, things in the entire report. What happened to Tesla vehicle orders the day after the Super Bowl, where a bunch of companies ran ads for their supposed, alleged, and hypothetical electric vehicles and steaming piles of excrement? What do you know? All that money that Tesla's so-called competition spent trying to trick consumers to buy their inferior products resulted in a massive increase in Tesla orders. Why? Because some consumers are not so dumb that they'll just get spoon-fed and go, oh, I'm going to buy that. Some consumers actually thought, oh yeah, electric vehicles, okay, cool. Let me compare that to a Tesla. Oh, wait. Huh? Tesla's that? I'm buying a Tesla, bro. The end. This is literally what happened. Tesla's competition, the company who Tesla is currently in the process of bankrupting, spent incredible amounts of money selling Teslas during the Super Bowl. Literally, nothing else to say apart from awkward, but predictable. We can also see Tesla's GAAP operating margin over the trailing 12 months here in red. Other automakers, all soon to be extinct in grey. Notice a trend. Notice a trend here. Tesla's GAAP operating margin continuing to grow exponentially while other automakers languishing. Again, what's the trend? Look into the future. It's not about today. It's about tomorrow, next year, next decade. Where's this trend heading? Anyone? Let me know in the comments below. And as usual, Tesla reiterating, over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. And over time, we expect our hardware-related profits to be accompanied with an acceleration of software-related profits. Translation, we expect to continue to print increasingly large amounts of money over time. Such a shame that they don't have a publicly traded stock that I could purchase, because I'd probably do that. My favorite slide in the entire presentation, simplification of vehicle structure and manufacturing. On the left here, we've got the Model 3 body structure with 171 different pieces of metal highlighted versus the Austin-made Model Y body structure. 2 pieces of metal highlight, 1,600 fewer welds. That's a lot of time, expense, energy, fucking around to get a vehicle produced. Let's zoom in just a little bit, just to give a sense. Okay, all of this stuff needs to be stamped, welded, joined, placed, etc. This is an absolute nightmare versus the transition where instead of having literally 100, 200 plus parts, you've got 2. We all know about Tesla's gigantic kicker casting and the impact, but this is a great visual representation of the massive leaps forward. And notice the body structure of these vehicles. There's very little else involved here. You just have a few additional pieces and that's it. Tesla's deleted, as Elon says, most of the parts and most of the processes in the actual body of their vehicles. What did Elon say again? The best part is no part, the best process, no process. That wasn't just a catchphrase. And finally, my absolute favorites every time. I love to look at the trailing 12-month data. Check this out. We're looking at vehicle deliveries. By the way, trailing 12 months just smooths out some of the lumpiness, the quarterly changes, and so on. What's the trend here? Tesla vehicle deliveries, exponential increase. Look at the sharp bend in this curve. This is exponential growth in a nutshell. And with the exponential increase in vehicle deliveries, we see the same pattern. An exponential increase in operating cash flow and free cash flow, and yes, net income and adjusted EBITDA. If any of you happen to know anybody short Tesla stock, aka short brain cells, this is all you need to show. Just, hey, dude, do that. Although I don't think there's any women that are that dumb enough to be shorting Tesla stock. I don't know, correct me if I'm wrong. I've never seen a female Tesla short seller. I'm not sure why that is. Maybe women are just not as dumb as some guys. Anyway, just ask your Tesla Q friends, hey, is this a trend? And if so, what might the future look like? And if so, does that affect your bearish thesis on Tesla? Picture is worth 1,000 words. I just don't know what else to say. This isn't an opinion. This is data. And now a recap of the earnings call, some of the highlights, and stay tuned. There are some seriously juicy details and bombshells here. This is why it's so important to listen to these calls and to do so closely and pay attention. By the way, I highly recommend everybody next time, Tesla earnings call, make your own notes. It helps you remember some of the stuff and notice some of the things that other people might overlook. Tesla confirming that Q1 was a challenging but extremely successful quarter. Massive challenges, including obviously supply chain logistics and the fascist shutdown in Shanghai. Despite that, Tesla set a bunch of new financial records. Literally everything that matters, new record. Absolutely crushed it. Shouldn't surprise anybody, but always surprises Wall Street. Strange. And some interesting notes. Q1 deliveries generally had pricing set in prior quarters, and this is because of the massive wait times. Custom orders to Tesla today, they could be waiting 9+ months to take delivery. So Tesla's trying to anticipate pricing increases and factoring in wait times while adjusting pricing. Again, that operating margin over 19%. I could literally say that all fucking day, dude. This is insane. If you're not a finance business nerd, you're probably not going to get this, but this is absolutely absurd. A couple of warnings for Q2. 1 month of volume was lost to the fascist shutdowns in Shanghai. Limited production has just restarted in Shanghai, and Austin and Berlin ramp inefficiencies will impact Q2. In other words, there's going to be a negative drag on financials as a result of the ramp of Austin and Berlin plus the shutdowns in Shanghai. is what it is. They're just letting everybody know, stay tuned, this will be around the corner. Yet, Tesla's still confirming they believe a 50% compound annual growth rate is still achievable for 2022. Elon confirming that the China team got fucked by the shutdowns, but still slated they're executing great. Shanghai ramping back up now. They're doing an excellent job despite the headwinds. And by the way, they also pointed out, these shutdowns, it's no notice, like bang. Tesla didn't even have the opportunity and rarely does have the opportunity to plan for these disruptions, which sucks. It'd be a lot easier, but it's like, oh shit, what do? Well, we just have to pay a shitload more to get stuff expedited, pay extra freight costs, blah, 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 blah. Just do whatever we can to solve the problem. So despite these challenges and the extra costs, Tesla's still slaying it. Elon also confirmed that he believes that 60% plus growth over last year is still possible unless there's any more major surprises. That would be 1.5 plus million vehicles delivered in 2022. And now, time for the bombshell, discussed recently, but more detail provided here regarding the dedicated Tesla Robotaxi. No wheels, no pedals, blah, blah, blah. The goal is to achieve the lowest fully considered cost per mile, accounting for everything. So think about this for a moment. How does Tesla achieve this? 1, less mass, less stuff, okay? Less mass you're moving around, the less energy required, meaning the cost per mile is cheaper by default. In addition, ultra efficient powertrain. In addition, take all the shit out that you don't need in the vehicle. That just adds additional cost to the actual hardware. This is going to be a reimagining of what a vehicle is. I don't think people are quite prepared for what Tesla's going to actually show when they do reveal this, but it's interesting to know, to hear confirmation, this is the goal, reduce the cost as much as possible, aspiring to reach volume production of the dedicated Robotaxi in 2024. 2 years from now, what the actual fuck. And Tesla says, obviously, this is going to be a massive driver of their growth. Elon also pointing out that Tesla's just 5% along their way to their production goal of 20 million vehicles per year. And note, a very important one, please sit down for this and rewind as many times as you need until you bust a few nuts. Quote, Optimus is super important. Ready? Those who are insightful or listen carefully will understand that Optimus will ultimately be worth more than the car business, including FSD, not just vehicle sales, but FSD software revenue as well. That's my firm belief, and my firm belief is that Elon is right. Wall Street won't get this. Most stock investors won't get this because people don't have the imagination. They won't listen carefully, or they don't have the grounding in AI, neural networks, and what it means to actually be developing an intelligent humanoid robot. This today is, in my opinion, the single biggest business opportunity in the history of planet Earth, and it's not even close. Yet most people are completely dismissing this, or they don't have the groundwork and the understanding intellectually to get what this means. Even if you're a skeptic, let me just ask a question. If Tesla can pull this off, I mean, if 20, 30 years from now, Tesla's producing humanoid robots that cost less than a vehicle, that can do the equivalent of 2, 3, 4, 5, 10 humans worth of labor in a single year, and Tesla can massively expand the global labor market, and the marginal cost of energy is basically zero because we have an ultra super abundance. We've got solar, batteries, more energy than we can possibly need. The numbers here truly are nutty. These are things that I've detailed more in my Tesla valuation model, which you can find on Patreon at the investor support level and above. Tesla bot dwarfs everything else on Tesla's radar, and it's not even close. This is Elon Musk almost pleading with people to please use your fucking brain and at least think about this before dismissing it. Listen to what we're saying. Think through the implications. But stock market isn't getting it. Don't know what else to say. Thought the idea of Tesla being $10, $20 trillion at the end of this decade was absurd. Just wait until you realize the potential impact of Tesla's humanoid robot. Again, confirmation that over 100,000 users in the United States are now part of the FSD beta program. Also some notes on the Shanghai shutdown and its impact, confirming that Tesla lost a lot of production and upstream suppliers also had issues, including loss of production. So there's going to be some flow-on effects there as well. But Giga Shanghai is coming back with a vengeance. Good spelling, Stephen. So if there's no new issues, Elon believes that record weekly output could be achieved at the Shanghai Gigafactory later this quarter. Now, to me, this is actually extremely impressive. Ramping back up after a total shutdown, not a fast process. I'll be very happy and a little surprised if Tesla can pull this off, but this is super bullish. Elon believes Tesla's Q2 deliveries, I think globally, could be more than Q1, but Q3 and Q4 will be substantially higher. And again, Elon reiterating 1.5 million or more cars delivered this year is the best guess. We also learned that it takes Tesla close to a year, around 12 months, to ramp to 5,000 vehicles per year at high quality, but Tesla is getting much faster at doing this. And now some fascinating details around raw material costs, price increases, and so on. Tesla was explaining that their delivery wait list is quite long. Some vehicles that are ordered today won't be delivered until next year. So Tesla's price increases are done to anticipate supplier and logistics cost growth. In other words, what Tesla is aware of and or believes will happen. So that's why Tesla is increasing prices today. Quote, a car ordered today will arrive in a year in some cases. So this is interesting. Tesla isn't increasing their prices reactively as costs increase. Instead, they're thinking, oh, hang on a minute. What's happening with commodities prices? What's going on here and there? Okay, our costs are likely to increase here. We know this cost will increase to X, Y, or Z because we've got a deal, a supply contract, etc. But there's also some uncertainty. What can we anticipate? Tesla's literally playing 4D chess here. They're ahead of the game. They're anticipating rather than reacting. In other words, all things being equal, Tesla's financials shouldn't actually be negatively impacted by supply chain issues, material cost increases, and so on. Because rather than reacting, they're anticipating. Elon even mentioned that it's possible that if Tesla has overestimated some of these cost increases, they may actually be able to reduce prices in the future. And Tesla reiterating once again, they are very much production limited, not supply limited. Another fascinating insight I'm actually surprised that Tesla was willing to reveal here is that their raw materials make up about 10 to 15% of their cost structure, meaning if material costs go to the moon, this is going to impact up to 10 to 15% of Tesla's costs. Tesla also reiterating that they're trying to anticipate where things will go and ensure pricing is put in place and aligns with those increases as they hit. Again, 420 steps ahead. We also learned that the 4680 cells are making consistent progress on their 5-year cost targets, which were the cost targets initially announced at Battery Investor Day. Tesla aiming to reach those around mid-decade. They're still on track. This is good news. Obviously, the caveat here, the exception, material costs, which Tesla doesn't have a whole lot of control over. Actually, they have no control over, aside from being able to lock in some longer-term supply contracts. And a super interesting insight here, Tesla believes that the 4680 cells will be competitive with the best alternatives. In other words, the best battery cells on Earth. Tesla's brand new 4680 cells, still ramping up, will be cost competitive later this year and exceed the best alternatives by next year. Again, this is one of those moments that you don't really want to be a cell manufacturer that isn't Tesla, because it's kind of embarrassing that a car company came up with a better cell design and a couple of years later they're going to be making better, more economical cells at volume than you are, the things that you've been making for multiple decades. Awkward. And now a few comments where it's definitely worthwhile to read between the lines. Quote, whatever the limiting factor, we will take action on. Tesla continuing, mining and refining lithium appears to be a limiting factor and has a big impact on cell cost growth. So, let's see. Whatever the limiting factor, we will take action on. Mining and refining lithium appears to be a limiting factor. You guys, put two and two together, right? Yeah? No? Yeah? Good. Tesla is looking at ways to accelerate the amount of raw materials. Quote, we're thinking about these things and we'll have some exciting announcements in the months to come. This is a serious bombshell. Guys, girls, mining and refining lithium. We'll have an exciting announcement in the months to come. I'll leave it at that. Tesla also noted that they're already recycling 50 tons a week in Reno. And some interesting comments here. The casting of the Model Y, the giga casting, the molten aluminium. Tesla's currently casting 2/3 of the Model Y body, and they can throw scrap back into the casting pot, it's into the melting pot, literally. So all the materials from stamping, the scraps, etc. can go back in. There's almost no waste in this process, and hilariously, that also includes the wheels from legacy gasoline cars. Yes, that's right. Tesla's basically recycling dinosaur parts to put in the products that are the things that are actually responsible for making the dinosaurs go extinct. Really. And regarding the ramp speeds, Berlin and Austin versus the Shanghai ramp, Tesla confirming they expect the ramps in Berlin and Austin to be faster than Shanghai, especially given the fact that they have veteran teams that have been on the ramps in all their factories that have learned a ton. Also, the body shop size drops around 60% with front and rear castings versus the traditional process. This obviously saves a lot of time, costs money, blah, blah, blah. And for more questions about the Robotaxi, asked whether or not this will be sold to consumers at all. Well, Elon basically dodging the question, we don't really want to, give it all away here. That to me suggests there's a pretty decent probability that Tesla isn't going to be selling this to consumers, at least not initially, or if they do, they're going to be doing so at an absolutely obscenely high cost. Why? Why not? I mean, think about this. From a business point of view, if you're Tesla, your mission is to accelerate the world's transition to sustainable energy. And you can produce a vehicle, maybe it costs you $20,000, $25,000 at most to produce. And in a single year, it'll bring in more revenue, maybe even more profit than the entire cost to produce. Why the f would you sell that to a consumer when you can just keep it? It'll pay for itself within a year and then just print money indefinitely. Plus, you'll have complete control rather than a consumer buying a vehicle and then sometimes it's available for the fleet, sometimes it isn't. Again, back to Tesla's mission, accelerate the world's transition to sustainable energy. Tesla's goal, obviously with robotaxis, will be for each robotaxi to do the maximum number of miles possible. And the only way that's possible is if Tesla is in complete control of the entire fleet. My supposition here is that the robotaxi will be a dedicated vehicle that Tesla produces. They'll run their own fleets, but there may be an option for commercial consumers to actually buy these, but they'll be paying through the nose. Tesla has to account for all the future revenue and profits they lose by giving away control of their robotaxi asset to someone else. And yes, Tesla aiming to do a robotaxi product event next year. Also confirmation that Berlin and Austin both have 2170 battery cell capability and 4680s. In other words, if there's issues with 4680s, not a big deal. They can fall back to 2170 cells. They're not going to lose production. Tesla also believe that in Q3 or Q4 this year, they'll really be hitting their strides with volume production on 4680 cells. Also confirmation that 4680 output is not a risk to producing 1.5 million vehicles in 2022, but it would become a risk next year if volume production is not solved by early 2023. But Tesla highly confident of doing so. We also learned that Fremont is now achieving record output, and spoiler alert, this is going to continue to increase over time. Tesla deletes parts and processes, becomes more efficient. They'll continue to squeeze more capacity out of Fremont for years, maybe decades to come. We also heard that some suppliers have been requesting 20 to 30% cost increases over the last 12 months on parts and components, and this is brutal. More on robotaxis. Robotaxi with autonomy will end up providing consumers with the lowest cost per mile transport that they've ever experienced, talking at a potentially 5 to 10 times lower cost per mile than anything else. And robotaxi rides should cost less than a subsidized subway or bus ticket. What happens to buses and trains at this point in time? Also, Tesla does have long-term contracts keeping costs down at the moment, but those contracts will obviously run out, expire at some point, and then Tesla will see significant cost increases on those materials and items. Elon also pointing out that lithium margins right now are practically software margins. The spot price has increased around 10 times the cost of extraction. In other words, about 90% margins on lithium at this point in time. Elon asking, can more people get into lithium mining? Do you like minting money? Well, the lithium business is for you. Let me know in the comments below if anyone's in or considering getting into the lithium biz. Tesla were also asked, what are you going to be doing with all the money you're printing at the end of the decade? Maybe $500+ billion in profits per year? What are you going to do with that money? The response, I don't know, we'll try to do something useful with it. Further reiteration from Tesla not to look too far ahead. Their goals, really, get robotaxis on roads, get Optimus in use, and then evaluate the size of cash flows at that point and make decisions then as to what's next, e.g. how to spend the money. Whether it's dividends, whether it's just building out a stupidly large fleet of robotaxis and humanoid robots for Tesla's own use, who knows? But Tesla not looking too far into the future in this regard because they've got major problems to solve first, autonomy, Optimus, and so on. Tesla also provided an estimate that the Cybertruck will probably have around 20 to 30% less parts than a traditional pickup truck. Obviously, the exoskeleton contributing enormously in this regard. Elon underscored that the biggest increase in Tesla vehicle production output will come as a result of Giga Texas ramping, and when asked about a potential new CEO compensation plan, quote, no discussions currently underway for incremental compensation from me, said Elon. In other words, at this point in time, Tesla haven't been talking about a new CEO compensation plan, but spoiler alert, there will be one. It's only a matter of time until this happens. And I can't wait to watch people flip the flying out at the obscene amount of potential compensation Elon be entitled to if he can, I don't know, maybe 10x Tesla again to $10+ trillion. It's funny how people flip out about this. It's like, it's so unfair, he doesn't deserve that. Failing to understand that the only way Elon gets paid is if he brings staggering value to Tesla stock investors, which is kind of his job as a CEO of the company. This is one of those things that just I don't really get, in my opinion. See, some people, for example, they hear that a CEO made $100 million in a year, maybe even $1 billion in personal income, and they say, that's not fair, that doesn't make sense. I totally disagree. People should be paid in proportion to the amount of value that they create. It's simple as that. It's a ladder. Start at the bottom of the ladder at McDonald's. Eventually you can climb up. If you can increase your value to the marketplace, there should be no limitations to how much compensation you receive as long as it's in proportion to the value you add. Don't take it personally to everybody currently earning a minimum wage, but the reason that you're earning a minimum wage is because you don't bring more than minimum value to the marketplace. If you can increase your value to the marketplace, you can also increase your compensation. Might not be an easy pill to swallow, but they're the facts. Over the past sort of decade and a half, I've been able to increase my personal income by about 20x. Why? Because I've increased the value that I can provide to the marketplace by a comparable amount. Elon, of course, is on a whole other level. Regarding opening Tesla's supercharger network to third-party consumers, Tesla confirming that they'll provide third-party access globally. Quote, we want to do the right thing. And now, another massive bombshell. Make sure you're sitting down for this one. Regarding Tesla insurance, Tesla is now the second largest insurer of Teslas in Texas, according to their data, and possibly by the end of Q2 or Q3, they will be the largest insurer of Teslas in Texas. Implications, think about them. If you follow social media, you'll already be aware, but Tesla recently expanded their insurance products to a number of additional states in the US, and lots of customers have been reporting massive savings relative to their previous insurance. And stay tuned because it gets even juicier. Tesla are working to get 80% of US customers able to access Tesla insurance by the end of year, and then expand internationally. Wait for it. Ready? Tesla is now underwriting insurance. This is huge. All the risk is internalized. And guess what? all the upside is as well. The less claims, the safer Tesla vehicles get, the more economical they become to repair, the more money Tesla prints, and or the lower their insurance product price can actually be. RIP automotive insurance companies. Now you may think it's not that big of a deal, but spoiler alert, fast forward 10, 15 plus years when Tesla has a significant, meaningful double-digit percentage of the entire global automotive fleet, and every consumer with a Tesla vehicle would have to be a moron not to be using Tesla insurance. What happens to the insurance companies who want to compete with Tesla to insure Tesla vehicles but don't have the data, therefore can't match the costs? Doesn't end well. Don't tell Warren Buffett. Tesla now has fully vertically integrated insurance with respect to the system and insurance. Quote, having real-time feedback for driving habits is actually resulting in owners driving their cars in a safer way. Tesla has effectively gamified insurance as well. They've got the safety scores. This is having a meaningful impact. Tesla drivers are now meaningfully safer than they were previously, simply because they're being told what they're doing that's unsafe, and they're able to adjust because their premiums on insurance will go down should they do so. Having Tesla insurance doesn't mean you're not allowed to drive like an absolute fucking moron. It just means that if you drive like an absolute fucking moron, one, you're gonna know, and two, your insurance costs will go up. Tesla are also confirming that insurance has become a real passion project. The goal here, save people money and make the roads a little safer. The customer experience is just better. Quote, we want to turn a nightmare into a dream with Tesla insurance. There's a lot of detail. Tesla instantaneously learning about an accident. You have to go back and forth with claims and blah, 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 blah. This is a great solution for consumers. Over the long term, Tesla insurance will be contributing hundreds of billions of dollars of revenue to Tesla every single year. Of course, I did make a video about this 2+ years ago, so it shouldn't be news to anybody, but it's good to see this thing progressing. In summary, Tesla absolutely knocking it out of the park, crushing earnings once again, smashing records on everything that matters. And I mean everything that matters, revenue, all of it. Winning, winning, winning despite incredible headwinds, embarrassing everybody in the automotive industry, embarrassing the battery cell manufacturing industry, embarrassing practically everyone except themselves. Huge news here, more details on a dedicated Robotaxi, Tesla insurance absolutely slaying it, Tesla printing money in their sleep, and Elon doing his absolute best to emphasize and stress how big the Tesla Optimus humanoid robot actually is. Hope you guys and girls have enjoyed the video. Let me know your thoughts on Tesla's stunning earnings and some of the bombshells on the earnings call in the comments below. And finally, don't forget to join Patreon with the card in the corner or the link in the description. You'll gain instant access to well over 100 exclusive videos, plus a bunch of other exclusive content and perks, and up-to-date access to my Tesla price targets all the way out to 2031. And plenty more. So I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel, and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.